Ladies and gentlemen, welcome to the Big Tech Frenzy. How you all doing, huh? How's everybody doing? It's Friday night. We're about to get into a huge earnings week next week. I mean, just massive. Next week's probably going to be the most important week that we see. We have Microsoft, Meta, Google, Mercado Libre, Amazon, Apple, Coinbase, Reddit, Cloudflare, Strategy, ServiceNow, Visa, MasterCard. Also, and you know what's funny is a lot of these are falling on the exact same day. But probably for this community, the largest one that we're going to see next week, SoFi. SoFi Tuesday morning will be live, and that will be a lot of fun. A lot of expectations, I think, are getting pretty pulled forward. So, little messy there. Okay, I'm starting to see some predictions coming out calling for a lot of people calling for $1 billion in revenue. It's not that I don't hope for that as well. I think that if you set yourself the idea that SoFi is going to have such a breakout quarter, I mean, the most unbelievable quarter that we've ever seen, way above the highest analyst expectations, you're going to set yourself up to be disappointed if it's anything short of the most unbelievable prediction ever. Okay, so people need to realize that last quarter, year-over-year growth was off of a bad comp. This year, this quarter, it's going to be on a good comp, meaning the year-over-year growth rate will be very hard to grow. They're still going to grow, but let's tamper those expectations thinking they're going to be like, 50% year over year. I think that's going to be hard. I don't know why I always eat right before I go live. Sometimes I try not to, but other times I just I haven't eaten in a while, so I try to put something in my stomach, and yeah. Geez. I actually just signed up for this. There's like a local kitchen that it's not a private chef, but it's like they will just deliver you food on a constant basis. And so they're not cooking in my kitchen or anything, but I got to figure out how to, plan my meals a little bit better and get some healthier food in me. So in that regard, I just got its first couple days that, first couple meals that I've been on it. It's pretty good. Pretty good. A little expensive comparatively to just eating out or doing Uber, but a lot healthier. Anyway, fresh trim and stash. Yeah, the stash is not trimmed. I got to clean it up a little bit. It's a little straggly, but yeah, it's quite the look. It's quite the look. Yeah, it's a confusing look. I'm a confused person. I mean, we're just doing our best out here. I mean, no one has the playbook for life. All right, I'm out here trying my best, growing this ridiculous mustache, trying to confuse a lot of people. Almost confused as a mitt. No, I'm kidding. Meanwhile, yeah, Matt Money ended up selling SoFi and rolled it into Amazon. Wow. Okay. All right. I think both are going to do well. Let's take a look really quickly at what ended up happening today for Wall Street upgrades, because across the boards going into Q3, there's been a lot of upgrades. So actually, before we get into that, I want to show you guys how far what we've seen so far in earnings results this year. This has been one of the strongest earnings seasons in years. 84.5% of S&P 500 companies have beaten profit expectations so far for Q3 of 2025, on track to be the best performance since Q2 of 2021. That's crazy. Now, going forward, I don't know the types of names or how it breaks down. Like, obviously, we got a lot of financials first. Now we're getting into more big tech. How that changes the expectations of the beats. I think there's still going to be a lot of beats across big tech. And, SoFi kind of finds its way into both of those subcategories, a tech company, a financial name. I'm expecting good results there. But 84.5%. I also want to check the poly market on SoFi. Is that still at 80% chance of beating 8 cents of EPS? Because we have to talk about that. I mean, the expectation for SoFi continues to get raised. Let's check Poly Market really quick. SoFi is an 82% chance on Poly Market. Actually, just jumped up to 84%. Only $27,000 traded on SoFi stock earnings. It's not available to U.S. consumers. It's not available to Canadian, gamblers or anything, like, if you want to call them gamblers. So, maybe that's what's keeping the numbers down. But yeah. What's the name of the company that cooks the food? I'm going to keep that to myself just because it's a local place. I don't want to kind of dox where I'm at or what I'm close to, but it is a local spot. It's not a chain or anything. They run that one kitchen. Yeah. It'll go higher to 7,000. I do think, especially going forward, if artificial intelligence and blockchain and humanoid robotics, like all those tech changes, I know there's a lot of forward investment on those, but all of that leads to higher and higher margins. I just think earnings in general across industries, exactly what the internet did to many businesses, that margins usually do expand over time. And then if margins don't expand, it's because a new disruptive player comes in and offers better pricing. Like, for example, whenever you used to ring up your broker over the phone and they would, essentially take $15 or at one point $25 to put in an order for you for your stock trades. Well, E-Trade kind of changed that. They increased the margin, but didn't change the pricing. That at the time, whenever it came out, was $15 per transaction. Then Robinhood came in because they realized, oh my gosh, the margins here are just so insane. We do not need to charge nearly that much for a transaction. We could do this not in under $10, not in under $5, but essentially commission free. And then offer pennies on the dollar for payment for order flow, which, by the way, they were doing anyway. So that I also find, is another thing that could happen. This either returns back in higher margins for businesses, or new disruptive companies bring down the pricing on what we consider to be, the average cost of an Uber delivery, the average cost of, food for agricultural investments, stuff like this. So that all kind of trickles through. Technology is inherently deflationary. You can see the example that everyone brings up is televisions as well. Look at the quality of the televisions, and then also look at the price versus inflation. I mean, they've essentially gone down by 95% in terms of their price, and the quality has, 100x. I don't think too much about Intel, to be honest. Sorry. But we will definitely have some NVIDIA discussions around earnings as well, before my predictions of it, and then obviously during the actual call and everything. Let's see. Birthday haircut. Yeah, my birthday's gone past. Just it's been a while, Got to get a haircut from time to time. I'm that classic guy that gets his haircut every 3 months. Just changes his style as I don't really care. How do you feel about Netflix at this price post earnings? I don't know how to feel about Netflix. I find it very interesting that they don't show subscribers. I feel like that should be the number one KPI. And if it's not, break that down between, your regular plus subscriptions and the average cost versus the basic subscriptions with the advertisement. Like all the granular data that you can give to investors is very exciting. The fact that they took that away is not inherently bearish, but it does allow me to, it's harder for me to construct a thesis on the company if I have less data, less extremely important data. Overall, I mean, I do have a Netflix subscription because my girlfriend wants it, but I would not have one in this house. I find myself to be on YouTube a lot, very bullish on YouTube taking market share from everyone. Yeah, that's sort of how I think. So I'm not anti Netflix. I think they're going to do great things, but I'm also not looking to buy in. And I don't know what their valuations and all this stuff are as of late. I'd have to take a look at that, but yeah. I don't like whenever companies take away KPIs. BM&R is staking soon, says Tom Lee. Yeah, it's true. Yeah, so I have a very exciting BM&R video coming out. It was supposed to come out today. Recording and everything all got messed up. My time got flipped around. So the video is all recorded, but it's going to come out tomorrow. So weird time for stock market videos to come out. But this one is exciting. This one's an exciting one. I can't help but buy BM&R. I mean, I'm just buying this stock constantly. It's getting me so excited. Curious on BM&R end of year. The end of year pricing on BM&R will be wholeheartedly tied to where Ethereum is. Obviously, BM&R will continue to dilute and buy, and that'll probably happen every single week as long as they can stay above a 1 MNAV. And I'm doing my best to keep them above a 1 MNAV. I mean, I keep buying, but yeah. This is your job, LOL. What do you mean you got busy? I don't know. I've got a life. Like I've got a wife and a girlfriend, and I've got things to do. So that's funny, but yeah, it's true. I did squeeze in enough time to record and everything, and then with the with the recording stuff, that ended up failing. That sucked. Evan, we're 2 for 2, baby. I called the Chargers winning. I called the Knicks winning. And you know what? The Knicks are going to go on a hot spree. Yeah, they're going to win. I don't even know who they're playing against. I didn't even know they were playing today. They're going to win. Are you going to live stream your engagement? Maybe not the engagement, but I definitely have thought about a wedding for sure. I mean, I'm a content creator. I got to create some content. The NBA season just started. Who cares who won the game? It's not that I'm not following sports at all. I'm just randomly flipping heads or tails on which company or which team I think is going to win. And right now we're batting 100. So we're going to hope to keep that up through the season. Do not put money on my predictions, please. Okay. Evan's got enough money to throw around so he can have fun, but do not follow. I'm going off of zero information. I'm going off vibes. Okay. Hey, cheers for streaming. Took my eye out at work, so keep me entertained. Took my eye out at work? What? Like an injury? Okay. Okay, yes, the analysts. You're so right. You guys got to keep me on pace here. Jeez. So we ended up getting some more analyst predictions for a few different companies. Okay. These are Wall Street institutional analysts. You don't have to agree with what they say, but a second opinion is, worth as much as you want to put weight on that, I guess. We ended up getting 2 more analyst predictions on SoFi as I spit while talking here. We ended up seeing Truist Financial and JP Morgan increasing their prices while both putting hold predictions. It's been a lot of hold and sell and nothing positive for a while on SoFi. But once again, I mean, they cannot deny increasing the price from $24 a share up to $26 and $23 a share up to $29. And essentially just having to continuously get closer to that price target as they, don't want to lose their jobs. So they're kind of cop-out answers, but still it does boost up SoFi stock. Reggie Smith ended up saying that the firm says that the company has a track record of beating and raising. JP Morgan cites continued signs of stable credit performance and strong loan buyer demand for the target bump. Okay, Reggie, but why do you think that they're demanding a premium right now? And why do you think that after bringing up the fastest growth rate that we've ever seen at the highest margin, that's going to end up sinking their stock back down to $26 a share a year from now? So 1 full year from now, they think they're going to lose $3 a share. It's going to go down 10%, and that's based off strong credit performance and beat and raising targets. Make it make sense here, ladies and gentlemen. That's been Wall Street's motto on SoFi forever, though. The only person that's actually coming out and changing any of their real guidances on SoFi and actually seeing what's going on is Devin Ryan. Devin Ryan hasn't even put a price target on this name. So he's saying, hey, it's going to do really well. He put it as a market performance. So it's going to continue to grow, but no actual price target by year end. Not year end, 12 months out. That's what they always do, is 12 months out. And then Truist put it from 23 up to 29. Large increases the average price for SoFi, but once again, doesn't change the outlook, anything along these lines. Let's quickly take a look at, if I remember correctly, SoFi's revenue got bumped up on this news, but not the EPS. Let's see. Earnings estimates for SoFi on a quarterly basis is still 8 cents, but consensus revenue is now at $895.15 million. Okay, so a larger increase. The high end of the analysts is Devin Ryan at $791 million, and the low is still $849 million. $849. Show of hands, how many people think SoFi is going to get $849 million? It's like, how do these people have jobs? It does blow me away. It really does. $849 million. What possibly shows you that that's going to be the case? I'd love to know. However, that cannot be said across every single stock. Okay. SoFi, by the way, so just so you think, hey, you know what? They're pessimistic on this company. They were pessimistic on this company whenever it was $6 a share. SoFi has never, ever had a price target that has been like severely increased from where we are. So this drives me, the fact that we're lower in their average price across all of Wall Street's like $22 a share means nothing. They're clearly following, they're behind, they're using what might be old data. I mean, like they're acting like the Fed right now. By the way, chances we get a rate cut on Wednesday. I place that at can I say 100%? We're getting a rate cut on next Wednesday, which is the day after SoFi, midday, 2:00. That could also lead SoFi into an even larger increase in the stock price after we get a guaranteed rate cut. Although there is, if we end up going to the Fed watch, even if there is a 100% chance of a rate cut next quarter, right now it's at 96.7. I actually think that's crazy, especially with CPI. I actually think that guarantees a rate cut next meet, which is on Wednesday, that if this ends up coming through, there will be added pressure to bring up SoFi stock because they are going to benefit greatly from, this 96.7% chance of happening. If we get a 3.3%, also expect the worst. Like SoFi will crash if we don't get a rate cut because it's so, I think, anticipated for SoFi. But also it's a 3.3% chance. So if you were a betting man, a lot of you guys are, I would not put the money on hold. Actually, let's see where people are putting their money on. If I'm not mistaken, Kalshi just hit a record high for exactly 3 rate cuts this year. Am I not mistaken on that? Yes, an all-time high of 3 rate cuts on call sheet just hit 85%. So they're pricing in a rate cut for Wednesday and then also at the end of December as well. Okay. That is, by the way, skyrocketing, skyrocketing. Number of rate. Okay. Then we'll talk about the other company that's doing very well. I just want to show you a visualization of what I was talking about. I should have had it on screen. This is what I'm talking about. It just continues to climb as people get more and more data. And it actually looks pretty flat over the last little bit, but really we are seeing quite the uptick to 85%. I guess it looks much more easily visualized here. But yeah, 85% is now the chance of exactly 3 rate cuts. 4 rate cuts, 6%. 5 rate cuts, 1%. So people are actually pricing in, 92% chance of multiple rate cuts, at least. I place it at 3. I think 50 basis point cuts either time, October or December, would spook the market, and that'd actually be a bad sign. Most times during a 50% rate cut, that does price, that they're actually seeing like bad data. It's never really a good sign to see 50 basis point cuts or emergency meetings, these sort of things. They usually spook markets. Yeah. I recently heard SoFi guided for 1 to 2. Yeah, they guided for 1.5 rate cuts, which is not possible, but they're saying there's a equal chance of a 1 or 2 rate cuts that year. That's exactly what they priced in for. They also priced in for a 5% unemployment rate. I think last time I saw we were at 4.6 is what's guided for 2025. So they were more cautious there as well. And then for GDP, I think they were expecting 1.8% or 1 to 2%. I forget. And we're roughly in line with that from the Fed. That's for full year 2025, not trailing 12 months. Okay. I've held SoFi since $7 USD, buying Amazon now, bought Pepsi at 52 lows, and Alphabeth at low. Also, Rocket Lab at $3.50. I'm at Grab at $5.01. I mean, Sven, you're killing it out here. I even love your Alphabeth investment. But the bet on Amazon, though, that's the next name I wanted to talk about, because this, talk about Wall Street loving your stock. Okay. There's 41 analyst ratings for Amazon, all at strong buys. Okay. $269 is the average price. And all of the latest upgrades, which is as early as today, by the way, $300 a share. Don't worry about this OpenAI one. I put 0 credit into how they get to these numbers. KeyBank, 300, 250, 269, 260, 300, 280, 271, 272, 240, 265. That's all within the last 4 days. Okay, the upgrades across Amazon is just huge. All on the backs of them essentially shutting down the internet. Everyone ended up going, oh yeah, Amazon's still a stock and they shouldn't be at $212 a share. So I hope you guys bought, because, I don't want to say that. It could go the opposite way. Just because institutions are saying anything doesn't mean much. But I do like the consensus. I think that it's correct. I've been buying a lot of Amazon in the last little bit. And I knew, no, I don't want to say that either. I just think it is interesting whenever a lot of the people that I talk to have consensus across a single name, because we all look at the stocks very differently. it's a great sign to see. It's like the 13F filings. Whenever you saw UNH last quarter, like every large investor was buying UNH. You're like, okay, well, clearly I wasn't crazy for thinking that this was an opportunity. And by the way, I'm not saying I saw an opportunity in UNH. I did not. I'm not following that. I'm saying if you guys also saw UNH and then saw that, Warren Buffett and Tepper and Burry and all of these guys are also buying it. I mean, it's good confirmation bias. Now, do I think that there's going to be a lot of Amazon purchases this quarter around? I do. But yeah. Okay, let's see. Yes, those targets are 12 months out. Always, whenever you see the target, like if they put it in October, it's October for next year. Just a rolling 12 months for whenever they update their price target. Is the bear case slowing AWS growth? Yes, but I actually don't think that that's going to come to fruition. I actually think we're going to see a surprise for AWS. I would be shocked if, from everything I'm hearing, AWS is going to see some great growth and not Azure level growth, but a return to, potentially 20+%. Tanner, you busting out some liquor on this fine evening like a true Canadian? Is the Blue Jays game happening or something? Because I'll be happy if they win, but I also don't care. It's just at the end of the day, it's a sport. Okay. And I don't really care about baseball. Let's see. Do you think Hood beats earnings? Let me take a look at what they're projecting really quick. Go to the trusty fiscal AI and take a look here. Estimates. Because last time I remember, because they get so much granular data, like they see every single month and the volumes and everything, they just don't see the take rate. But even then, they can try to judge the take rate based on other sources that they get. They're usually pretty good at determining Robinhood's growth. So for revenue here on a quarterly basis, next quarter we're expecting 1.2 billion is the consensus. 1.2 billion. Oh my gosh. That's high. I think that's higher than what I have. So that could be concerning, I guess. That's crazy, man. 13 different estimates for next quarter. And wow, the range is from 1 billion, 1.02 billion to 1.27 billion. But yet the actual consensus is 1.2 billion. That's too high. Well, I can't say that's too high. I mean, I hope that they get it. It's just that makes it very hard to beat. Gee. Peakzilla, if I'm not mistaken, that actually means that that was a donation. It doesn't come through on StreamYard the way it should, but I actually sent StreamYard a message saying, hey, Twitch integration, it looks terrible. So I need them to fix that. We'll see what happens. We'll see. But thank you. Sorry, I meant to say thank you. Yeah, it was a donation. Thank you, brother. Okay. We actually reached 100 followers on Twitch, so thank you guys. I appreciate that. Got a prediction contract on the Blue Jays. What's their chances of winning? I would be interested just to see, like, I know that they have not been here before, at least in a very long time. So I would like to know. Does Kalshi have that for college football, or does it not pop up until the game starts? No, you must be able to buy beforehand, right? Uh 41.7%. Am I reading that right? 42% on Toronto. Okay. 42%. Oh, you're doing it on Hood. You're doing it on Hood, eh? That's awesome. No TA. Well, I think they're talking about potentially bringing in TA, but no, there's not chart building on TA. It's for fundamental analysis. If you're looking for TA or a platform for that, it'd probably like, I don't know. I'm not a TA guy, so I don't want to steer you wrong, but I think TradingView is one of those good spots. But Fiscal AI is, that's the place for fundamental analysis. Polymarket odds say Tanner's drinking at 15%. I would that sounds like free money. Tanner drinking at 15% sounds like you can make 15%. Or if you're betting on that 15%, you're going to make a fortune. I'm not drinking. Okay. So Hood tanks on earnings. That's not what I said at all. Oh, also, there was this great thing. Okay, so Earnings Hub actually did an update recently. Take a look at this, because we were talking about SoFi and what they will do after earnings. Okay. Everyone was saying, hey, they crash on earnings. So Earnings Hub ended up tracking the movements of each quarter and how they did. Okay. So if we take a look here, Q2 of 2025, we can end up seeing before earnings, the stock ended up being down 0.85%. And after earnings, 24 hours, the percentage change in the price of the day of earnings results and the percent change in the stock price the day before earnings release. Okay. It was down before earnings. And then the day after, it was up 6.6%. Okay. The quarter before that, it was up 2.44%. And then after earnings, it was up 0.5%. The quarter before that, it was down 10%, which sucks on great results. The one after that, it was down 6.5%. And then the one after that, Q2 of 2024, we're starting to get pretty far away, up 1%. So this idea that we just like lose on every single quarter is actually wrong. This is a great way to look at it. Post-earnings movement. Look, green, green, red, red, green, red, green, 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 green. Like, it's mostly green. Lately, in the last, like, if you pick out these 4 quarters, yes. I mean, there's definitely some negative moves, and those negative moves are down 10%. Like, yes. But there's a lot of people. This one was up 20. There was a lot of move or talk about SoFi stock, just like, this is the name that you sell on earnings morning, that it'll move, but then you want to get out. I'm not sure that that's true. I'm just going off the data here. So great piece from Earnings Hub. We love you. We appreciate you. Thank you. Yeah, well, data is for nerds. You're in the wrong habit, brother. I mean, this is the hobby for nerds. This is how nerds got rich. Just building apps and winning on Wall Street. But I do think that we will have a positive reaction on earnings. This is just my opinion. I'm not a TA guy. I really don't even follow price action that much. I mean, I hold on to good companies, and I've been rewarded for doing so. But Yeah. Respectfully, Tanner, why no soda ever? Sugar. It, it's just not good for you. You know, I don't even think that is that a controversial take. I just not a big soda or pop guy. I mean, obviously, I like it, but yeah, like I'd rather if you actually look at like a can of Coke or something like this, and then you compare to I don't know, depending on the flavor of ice cream, it'll change very differently, uh, or it'll change very quickly. But you can consume like a lot of cookies or a lot of ice cream before you get to the amount of sugar that might be in this, um, quick consumption type drink. I'm just really not a fan of taking in sugar through drinks. And I'm pretty sure, if I'm not mistaken, I could be mistaken, that it was, um, no, I'm going to say something that's inaccurate. But I feel like I want to, so just preface, I'm an idiot. I'm no health expert. I think there was something along the lines of consuming sugar through liquids that led to colon cancer because your body can't, it doesn't slow down the food fast enough. And so sugar gets passed. There's something there. I'll get fact checked here in a minute and be proven wrong. But that's why I really don't like consuming sugar through liquids as much. But yeah. Why are you gay? Yeah, I know. Why can't people just have a good time? Why do I have to be this party killing? No, man. Is the haircut? I thought I looked cute. Health advice is free. You can give it away. No one knows what they're talking about. Um, yeah. Bro, there are enough health studies to prove and disprove everything twice over. I agree, but that's also the case for markets as well. People will say, like, oh, did you know that if you look at every fourth quarter while adjusting to this ratio, and if it hits this, then there's a 100% chance that the market goes down? You're like, okay, but that's happened 4 times in the last 100 years. Like, I don't know. You can make data look the way you want it to look. That is a problem. But I'm just doing my best out here. That's it. I'm not trying to spin a narrative or anything along these lines. Pour some sugar on me. Good song. Unlike the news. Well, that's why I do think that there's been some, I don't know, maybe you want to chalk them up to like cringy comments from Elon at points, but like the whole like, we're the media. I really do believe it. I think honestly, just people are rewarding honest journalism, and that you see smaller creators get such a larger percentage of the overall market share, the content that people are consuming, just because like I don't know, it's beneficial to tell the truth and to not exaggerate claims and all of these things, and so people are being rewarded. So they're going to continue to do these types of things. Like Amit's one of the fastest creators to grow in the financial space, and he's not taking on sponsorships. So his path to success has just been be honest, tell your opinion, like just say it how it is. And I think that that's also a really great way to create a legacy. Like that's another thing that Warren Buffett always tries to highlight is, you can build up a whole lifetime of creating a reputation. You can kill it in 5 minutes. So it's much easier to do an honest profession. Might take a little bit longer, but boy, oh boy, is it worth it. So yeah, a bunch of these news stations and everything that took quick paychecks, I think will face the punishment of people not believing in what they have to say, and the creators and the new news sources that just try to be honest, and I think they'll be rewarded for that. People are rewarding people repeating their opinion on them. That is true. That is true. But also, I feel like I try to challenge that from time to time. I've been very critical of SoFi. Whenever I feel like it's time to be critical, I'm critical on Robinhood. I'm critical on a bunch of things. And I actually think that that's created, the extremists on all ends of these certain debates end up like they don't last long here because I try not to just repeat those opinions back in their ear. I mean, I think Trump has done this is going to politics somehow, but I think Trump has done great things, and those are great things. And I've called him out, say, hey, you know what, the deal with China and kicking away NVIDIA chips, the H20 chips, I think that was terrible policy. Do I think that was all Trump's idea? No. I mean, there were people around him that suggested that decision. That was bad policy. And then at the time that I said that was bad policy, there were a couple people who typed in all caps and freaked out and end up leaving, and they don't come back. And that's perfectly fine. Now we have a, more core audience that's willing to accept a little bit of criticism. So, yeah, I really do think that I guess this probably happens all over the internet, but this is the community for me, obviously. But really do love you guys. And I like that, people challenge me a lot. It's not just some sort of echo chamber. If you join the Discord or even see in these comments here, not everyone agrees. And I'm not here to ban anyone for their opinions or anything like this. Yeah. I don't know. You weren't too critical about the dilution SoFi did. I'm still positive on it. But there were a bunch of people who I think because they were retail, wanted me to hate it. I think it was actually consensus to hate it. And myself and many of the analysts did the math on the EPS and said, hey, you know what? I actually think that this is beneficial for this business. Looking back, obviously, yeah, we should have done this whenever the stock was at $29. But that is that's looking hindsight. They didn't know that was going to be the case. We were at record high prices for SoFi. So you won't ban me, Spencer? I honestly think you might have a preferred account. I don't know if I can ban you. What's with the bugger sniffing? I don't know. I think I might the cocaine allegations are getting out of control. Okay. We need to look up the symptoms of cocaine and then just realize that I have a sniffy nose. Okay, you guys need to chill. And I don't know what that is. Maybe that's an underlying health problem. Maybe if you just have a constantly stuffy nose your whole life, that's a sign of serious health conditions. But now we'll work through it. Tanner's the last guy that I would think is doing blow. I wouldn't even know where to find it. I wouldn't even know. I'm going founder mode. Yeah. I definitely have allergies. Okay. Let's continue on. Who likes this from Robinhood? Tell me if you guys like this integration. He ended up sharing this, and in fact, the post has just blown up 4.5 million impressions because Elon ended up retweeting it. We built a really nice in-app experience for upcoming Tesla shareholder vote. Check it out. And then he also went on to say, and you're about to see this integration, but that any of the recommendations or the things that they select is not actually them wanting to make a decision. Like Hood does not want to add in pick this or pick that. They're just showing the integration. But still, I think that looks amazing. Be gone with the having to send in a ballot through the mail and getting these huge booklets in paper. I hated doing that stuff. So now that you can do it electronically, it's made things very easy. I voted for Tesla on Robinhood today. Love it. Is he does he deserve the pay package, the $1 trillion, if he gets to 8.5 trillion? I mean, company's over $1 trillion today. For him to get it to 8.5 trillion, which is not a guarantee, just because you have a pay package doesn't mean you get paid. He still has to execute. He's multiplying this company multiple times. Do you think that he should be rewarded in that way? I saw that Shopify also had founder shares, and they ended up going public in 2015. They ended up giving him 40% voting share in 2022 during an annual shareholder vote. Why didn't he bring that up as an example is also what I wonder. So if he said he doesn't care about the money, he just cares about the voting share, why didn't you do some sort of founder vote, and then on top of that, do an even larger percentage of the company? Like, I would want Elon to have 50%. You know, it's his company. I mean, it's Elon. I'd let him have the voting share of Tesla. Like, give him the cards. Tesla has no chance without Elon. It's definitely not the same business. That's for sure. He's the man. You know, there's no such thing as a founder vote. What does that mean? Are you saying F shares are not a thing? They absolutely are a thing. Simon says, bro, stop. You are wrong about the founder shares. You can't create an elevated share category after IPO. Okay, but how did Shopify do it? They did it. Like, are you sure? I'm not saying that I have that knowledge. I'm just saying that has he looked into it? Because it didn't sound like he was all that confident. He said, to my knowledge, I mean, we looked at a couple companies. It doesn't look like it's a thing. He said it doesn't look like it's a thing. Shopify had an existing state structure from before IPO that they leveraged. Maybe. I don't know. If you're telling me that's the case, I'll believe you. But I just remember that during that 2022 vote, because I was around for Shopify during that time, my understanding was he did not have founder shares before, and that they gave him 40% voting share because he didn't want to get essentially ousted from his own business. But yeah, if you're telling me, guys, I'm from Canada. This whole idea that it's from Canada, they're all like, that means nothing. It means nothing to me. The same thing with there's a bunch of people going like, hey, but Elon's not actually the founder. It's like the dumbest comments. I'm fully aware it's from Canada. I'm from Canada. It's our biggest company in our country. Fully aware. But that doesn't mean that that doesn't exist in America as well. A lot of the laws are very similar. Your mom is from Canada. She is. You're right. I see. Elon studied in Canada. Yeah, I think that was true, right? He went to Canada for a bit, I think. There's been a lot of large CEOs that have been down in Canada for a little bit and, return back to the States. Maybe one day that'll be for me as well. Okay, let's continue on. Did you guys know that there is a digital asset treasury that is just buying meme coins? There is a digital asset treasury on the NASDAQ. Has a $40 million market cap. 32 million of that is buying bonk, which is like a jokey, like Shiba Inu for a picture type crypto coin that all they do is acquire bonk. I mean, all right. Is Shopify expensive here? I mean, Shopify's never not been expensive. So in terms of valuation versus their peers, they're expensive. Are they expensive versus the results that they're going to put up over the next decade? I continue to hold it. So no, I'm not trimming because they're quote unquote expensive, if that makes sense. So a bonk dat. Yeah, no, it's a bonk dat. I mean, there are signs. There are signs we're at the top. Thankfully, it doesn't feel that there's been as many comments that we are at the top anymore for the markets. We have these slight corrections that I think sort of blows off a lot of steam. Somehow that brings us immediately to extreme fear. And then people are fine with, bringing the S&P 500 to new highs again. All within like week spans. And yes, we're starting to get earnings. So yes, people are starting to realize that some of this pump is, fundamentally driven. Maybe it's just me that feels like we knew that was going to happen all along, but I guess not. I guess that's not always the case. How do we get the company logo in chat? Those guys are members. Some of the members, and by the way, guys, let me know what logos you guys want because I have to put them in. Those are just the ones that I thought about. But the members in chat can spam, SoFi logos and stuff, NVIDIA logos. They're kind of cool. They don't show up in this integration, but they do on YouTube. Do you think Chime is a better investment over SoFi or Hood? No. I've got way, way more money on SoFi and Hood than Chime. Chime's a trade for me. Like, which one do I think is going to be the larger institution 10 years from now? Like, SoFi and Hood is going to eat Chime's lunch eventually. I think New will eat Chime's lunch. But that's not going to happen tomorrow. And they're very cheap here. So we buy in. I also bought more. Sven, I got to say, you might be the greatest investor of all time. Every single price that you've put in, so like Rocket Lab at 3.5, SoFi at like 6 or 4 or something like this, BM&R 41. You're a legendary investor, brother. You got to send me these buys before they happen so then I can follow you in and then we can both profit. You can't let me getting to these trades afterwards. Come on. We need to have a beneficial relationship here. What are my top 3 biggest positions? It's NVIDIA, Shopify, and SoFi. I follow you in Amit. Brother, you're getting these like BM&R 41. I need to follow you. I didn't know this. I wasn't following it back then. You're doing great. I miss Palantir at 7. You know what's funny? I'll be very honest with you guys. I kind of didn't miss Palantir at 7. I think my average was actually 8 something, if I remember correctly, like 829. And I sold in the 20s. I was like, you know what? This has been a big run up. And We've made good profit here, but we are overextended. And then I saw it in the 30s and I was like, man, this is overextended. 40s, 50s, 60s. But the truth is, I never would have held to these prices because if I didn't sell at 20, I would have sold at 30 and I would have sold at 40. The multiple only got worse and worse and worse. So let your winners ride. It's true. It's true. But I didn't have conviction. I was borrowing that conviction from my friends. I like companies with a lot of visibility. And by the way, this was pre AIPCon and pre boot camps and all of that stuff. I think boot camps were just starting, just starting. And we didn't know that they were going to be such a success. But, you know, I was following, what were the names? Gotham and Foundry and all of these things. I think Apollo was around just at that time. It was exciting, but still Palantir was a very black box business. I didn't like that, but I also had good investing friends that were telling me how, like, constantly how well things were going, even though, you know, growth rates were getting worse. So that is a big, like, I let a pretty girl go that day. Oh, well, we make mistakes. Yeah. I'm a paper hands, weenie baby or whatever. I do sell options, Neep, on especially on some of my larger, more. It depends on the names, right? Like Hood's decent, SoFi's decent, Nvidia's great. You know, I don't really do it for names like Nubank or Mercado Libre. Well, I don't even have 100 shares of Mercado Libre, but like there's a few companies that, like, the premiums are just so terrible that I don't even touch it. But Nvidia is really good. SoFi is really good. BMNR is really good. There's a couple good ones. Michael, good to see you. Also, did you guys know we're back to all the ats in chat? We were getting names before. Now I'm all like, everyone's got ats in chat. Like, I see your tags, not your actual name. I have so much emotion to sell covered calls. I have too much emotion to sell covered calls in my SoFi. What does that mean? Like, you're worried that it's just going to continuously run and run further? I'm worried about selling covered calls on Nvidia because I think it's about time that they're going to see a pop. I feel like every single AI name and everything is running, and Nvidia is just sort of chilling in this range. And I think everything that we're seeing is just proving that they are going to post numbers that are better than expected. Yes, Rob, I do think that SoFi is going to tokenize private shares eventually. I think they're going to get into all of that. Don't want to sell shares? That's fine. That's fine. You can also go pretty far out, you know? It's on everyone's stream now. Mistake. I was so happy that it returned back. But yeah. Just roll it out. It's not always possible. If the price ends up running so far, you might not be able to get an ability to roll it out, you know, without paying more in order to get a, you know, further covered call or buy back your other ones. Sven said, what are your thoughts on Grab? I don't have any thoughts on Grab. You know, I still need someone to pitch it to me. No, I mean, honestly, I've taken small looks at it. I don't know the region. Don't really care for it too much. But I'm not saying it's a bad deal or anything. I just gave it, you know, 30 minutes of my time one day, and I was like, oh, well, this is not really grabbing me. I only buy options, never sell. I mean, yeah. I think the statistics, like if you want to talk about a casino, buying options is kind of casino-esque. The seller of options, the percentage chance is in your favor. The high majority of options expire worthless. So that gives sellers of options quite the advantage. But the upside is also very limited. You know, you're not getting paid a ton to sell those options. But if you go really far out on the delta, then you're almost just getting a tiny dividend on things that don't pay you dividends. So I do like it. I've actually I've learned to love it. Okay, let's see. Dad joke, my grab joke. My bad. No, I'm not apologizing. Let's go through some other fintech news. Affirm continuously, almost all the time, is getting more and more or partnerships, not acquisitions. We're about to talk about an acquisition, but not from Affirm. World Pay for platforms, huge partnership for Affirm. This could lead to a lot more deals with them. So they're doing very well there. But let's quickly transfer to is MD in chat? MD33, make yourself known. We're talking about Shift4. Shift4 to acquire Worldline's North American subsidiaries. This happened on the 21st. I only saw it today. Okay. But Bambora North America serves over 140,000 merchants across the United States and Canada. Their gateway supports a mix of online and in-person payments in a range of specialized verticals distributed primarily through a network of 500 plus independent software vendors that caters to the company's target markets. This is a textbook Shift4 acquisition, delivering a massive funnel of gateway customers and payment volume to cross-sell onto their global acquiring platform, said Shift4 CEO Taylor Lauber. The deal is similar to past transactions that have enabled us to rapidly grow our customer base by offering these merchants significant value and a better payments experience with streamlined end-to-end commerce solutions. 140,000 is freaking huge. So we've done a few acquisitions in the 50,000, 60,000, 40,000 range. 140,000, one large sum. Also a, how do you want to say it? Partial book of business purchase always scares me. I always find you can get a better price whenever you buy a full book, meaning you buy the business, everything, you get all the gems, you get all the worst clients, you get it all. Okay. Whenever you're buying a partial book of business, I always worry that those are a little bit cherry picked and those are all the worst clients and it's not as good. But they have better underwriters than me, and we'll have to see what happens from a Shift4 perspective. So, yeah. Amit is sick. Amit's sick. Is Shift4 the next 10 bagger? 10 baggers a lot. Then again, can a payments company that's turning into a unified commerce business turn into a $67 billion business? Yes. They're only at 6.7 billion. But, we'll have to see. I'm not looking for a 10x. I'm looking for them to beat the S&P 500. And I think that's very, very highly in the cards for this name. They're so unbelievably cheap. They're growing across the board. Market share growth. I'm liking it. So, yeah. Okay, let's see. Shift4 is still based on a good economy. I don't believe this moment it will stay. I don't know what you mean by that. But I will say this company's been around since 1996, 1999, something like this. They've been doing this for a while. I'll take your 10x if you don't want it. You gonna eat that? Shift 4's PE is 29. Yeah, we did a video on all the financials and everything. We'll have to do that again one time. Let's actually just take a look. I'm kind of interested. So if you guys are interested, let's just quickly do a little detour down Shift 4 lane and just have a quick peek-see. Because I am wondering. Not price to sales. Price to earnings, 28.24 times. Yeah, that's cheap. Let's look at this on a quarterly basis, and then we'll see what it's done over the last 2 years. Because this is... Yeah, historically, at least recently, we're pretty cheap. The only cheaper time in recent history was April 4th. The other time was October 2023. What happened in October of 2023? Was that a macro environment thing? I think that's when we were originally buying this name, no? Anyway, April 4th was cheaper, but now 28 times. That's pretty freaking cheap. You know? What do they have for segments and KPIs? Payment data, subscription data, and end-to-end payment volume. Yeah. Payment volume's doing well. This quarter is supposed to be very strong. So we are going to see that growth accelerate. You're not going to see these dips again for a while. It'll be accelerating through the rest of the year. And yeah, let's take a look at their free cash flow as well. I just want to see what their price to free cash flow is. Price to free cash flow is 16.88 times right now. One of the cheapest prices that we've seen. Sorry, did I say 16? I meant to say 13.16 times. 13.16 times. The cheapest that we've seen it, even in April, was, where were we in April? 13.58 times. It's cheaper than what it was during the Liberation Day moment. And that was after Jared Isaacman left as well, if I'm not mistaken. Could be interesting. Okay. Shift 4 will not hold up their earnings. Yeah, I don't know. Can't you have that sort of concern across any payments name? Is that payments names do better during good economies? You know what's fun about payments names, which I always like, is they're inherently inflation proof. It's built into the business. If inflation goes up, just to exaggerate the numbers, let's say your currency ends up doubling the total supply. We have another COVID 2.0. Massive printing, the money printer go burr, right? That MasterCard and Visa and PayPal and Shift4 and all of these businesses just end up having the exact same take rate, but doing it with twice the amount of outstanding dollars. So money in circulation, and if the velocity stays at that same similar rate, that, you know, their revenue just adjusts for the amount of outstanding dollars. It's kind of cool. So if the burger used to be $4 and now it's $8, Visa gets paid accordingly. We'll see. My brokerage is shit, no options. Switch to Robinhood. Or so, I mean, your picture is SoFi. They have options. I don't do covered calls on Shift 4. I would assume that there's zero volume there. Gerald Fitz says, Tanner, I'm going to call you. Put me on the stream. How are you going to call me? Yeah, no, the payments names are really interesting. A lot of people look to gold and all of these different plays to hedge against inflation. You can just do that by buying Visa and MasterCard. They're pretty cool. Oh, New Zealand. New Zealand. Got you. Yeah. Are you going to do a covered call on the BMNR? I do write, or I do sell covered calls on BMNR. I should check my phone just in case Gerald Fitz is calling. No, he didn't. Dang shame. Okay. Let's go back into the news. Nubank ends up surpassing 13 million customers and driving financial inclusion beyond major cities. I mean, that is one of the best parts about Nubank and fintechs in general, especially in these rural areas where a lot of customers might not even have access to their nearest branch, where, their nearest branch might be miles away. If you got an internet connection, SpaceX helps this, by the way. More access to, the internet increases market penetration for names like Nubank and SoFi and Robinhood and all of these different solutions, especially for the international ones. So you see like C Money and, Nubank and Mercado Pago and all of those really bloom. It's very good for them. You'll see it in DLocal too. Less cash transactions, more online transactions, huge tailwinds. Just more. The younger people want cell phones. They want internet connections. They want digital payments. Thanks, Polish Sausage. Appreciate you. The premiums are too high on BMNR. That's the point. That's the good part about selling them. I'm not buying options. I'm selling them. I'm the one that get the premiums that you're paying too much for goes to me. In the future, do you think SoFi can ramp growth enough in time to overcome rate hikes? Am I getting a call right now by Gerald Fitz? No, I got a text message that said, "Let's go Blue Jays." Okay. And I put my phone on Do Not Disturb. Okay, one sec. But how will you know if you're getting called by Gerald Fitz? Dude, I'm like an old person. Where the heck? Okay, there we go. Oh my gosh. I couldn't even find it. Okay, what did you say? Can ramp growth enough in time to overcome rate hikes in future years? No. It's going to hurt them regardless. Like, no matter how fast, they could be growing at 80%. The market would still end up selling them off with rate cuts. Yeah, I don't think that they can outgrow their lending department, Even Upstart, a company that doesn't, quote unquote, often put loans on their balance sheet, they don't, do well during rate hike scenarios. They are a cyclical business, but that's not a bad thing. I mean, well, it can be bad, but it means that they also do extremely well during rate cut cycles. Will SoFi beat earnings? You just want to, you just set me up with a layup here, eh? You don't even need an answer there. That was a rhetorical question. How are you positioning your portfolio for when you have to pay by microchip in the future? This is why I love banks. For real, I'm going to honestly answer this question. If you own the customer, this doesn't matter. The microchip, the pay with your watch, the pay with your iPhone, the pay anywhere. If the deposits go into your bank and you have a real relationship with the government, and by the way, this can happen in crypto too, that the government will make, this is not a big prediction, it's actually a pretty easy prediction, but this is an important one. The largest custodians of cryptocurrency will be the largest banks today. JP Morgan, Bank of America, Wells Fargo, Citi, there's going to be other new players as well. They will be the largest custodians of cryptocurrency. Because it doesn't matter what you've custodied in the past or what currency it is, it's the banks. Like, that's not going to change, this technology cycle around. And nothing's going to change. That's my belief. And with that means that the technology changes of whether or not we're getting microchips. And honestly, I actually think the world has kind of been anti that. I think a lot of people want technology outside, not abrasive. That was kind of like 2015 through like 2018. There were a couple different like things of people like putting chips in their arm and stuff like this. I don't think people want that. I think people want a good smartwatch or earbuds or something like this that will handle those things that might have gone in your body previously. But yeah. Still, sorry, to answer your question, SoFi can do that. Bearish Neuralink. Well, I just think like the brain computer interface, like why can't that happen? Well, I guess maybe it couldn't, but I don't know. Right now, I'm looking at it from a medical perspective. I think it'll do well there. I think you'll have a little bit of time converting the masses on that one. Like some real BCI products might take a while. I'll do whatever it takes to stop holding my phone. I mean, that's what Meta's trying to do. But you don't need to drill into your head. You don't need to give yourself a lobotomy so then you can tell an LLM what you want without opening your mouth. Okay. So, wait, what? No, I don't think that people will more digital payments will happen directly from where people work and all of the like it's not like I'm even making this up or suggesting that this is going to happen. This is happening right now. There's less cash transactions in rural areas than what we've seen previously, and things like Pix, which is the digital payment infrastructure, the new payment rails that the Brazilian government had created, is the fastest growing financial how do you want to call it, like payment rail or infrastructure that we've ever seen, ever in history. People use it all day long there. And that's not just happening in Sao Paulo. Like, it's happening in all parts of Brazil. I bet you there's a statistic that you could find that like probably in 99% of countries, cash usage is going down. UMI, Pix, all of these things are growing. Apple Pay is a big part of that as well. Okay, let's see. My point is new is in South America, not Africa. DLocal is in Africa. And fun fact, and you're right, I'm not changing the subject that they're in South America, not Africa. But I was referencing DLocal whenever I was talking about African payments there. That Nubank actually has ownership in a bank called Time Bank, which is replicating what Nubank did, but in Africa. And there's many interviews from David Velez that highlight that they definitely want to get into the African markets. They want to be in many different emerging markets. That's why I brought it up. But mainly for the DLocal thing, because they're handling digital payments today. I heard Apple paying the Timmy Cook tax. Non-point V2 is definitely Steve. I hate these new ads, man. I just want to see Steve. I know it's Steve that said this. He's the only person that says Timmy Cook. Thank you, Steve. Not to mention the picture is literally a big blue S. You can implant an NFC under your skin. You want to do that, Chris? Because I don't. Why would I want to? It's on my phone. My glasses will be able to scan a QR code soon that'll let me make payments just from looking at them. Like, I don't know. I don't need to go to surgery to make payments or to scan a digital ID or something. That stuff's a little dystopian. I'm all good for like new technologies and stuff, but some of these things are like a little too weird. Thank you, Steve. We'll buy some Apple with that. I don't even have credit cards on my phone. That's you not trusting a technology that's been proven to work fine. You gotta be okay to let a credit card, which by the way, why don't you have a credit card on your phone? It's not even your money. If someone steals your credit card information, that's the bank's problem. That's their money. You don't want to put maybe your debit card on your phone, which is like, there's so many layers of encryption there. You're not only putting like, what do you call it? What's that encrypted number called? I forget. Anyway, not only that from Apple, but then the card itself. There would be so many layers of security there. I'm waiting for Meta to announce contact lenses next. I just, maybe that's okay for a lot of people. I've never been a contacts guy. Fair point. I feel like that's where Steve works, is the military. Military tech guys and contractors sketched me out. Yeah. Yeah. No, I know what you meant, but military sounds funny. And I like that. I think that's where Steve works. I said that joke already. Okay. Michelle says, same. I feel weird without my glasses. Are you even wearing glasses? Yeah, you are. Okay. I was like, I don't even think in the picture she's wearing glasses. Tanner, when banks hold crypto, are those holdings CDIC slash FDIC insured? My assumption would be yes. Warren Buffett owns Dairy Queen. The fun facts are just flowing. Yes, I knew that. Did you know? BMNR staking video. I've done one of these. That's not the video that's coming out tomorrow, though. I have done one of these recently, though. I don't remember what it's called. I think it's like, hey, what does BMNR do whenever they get to 5% alchemy? Something like this. You guys want to see another reason why I'm so bullish on Amazon and why I sold Trade Desk? Trade Desk shares, or TTD shares, trading lower after Adweek reported Amazon is offering agencies free head-to-head tests of its demand-side platform against rivals. Amazon is reportedly covering the costs of competing ad buys, tech, and measurement tools for 4 to 6 week campaigns. Talk about the confidence, bro. I mean, they just have too many tools at their disposal. They have a war chest of cash. They have so many other businesses that pay for them to grow in other industries. And if they feel confident now, that confident, I would be worried about other DSPs. That's very interesting. Did you see the compound video where they show how bad Amazon is at returning capital to shareholders? No dividend, no buybacks. Yeah, I know that they're the largest startup in the world. It'll come. I'm a young guy. I want them to grow revenue first. Yeah, F's in chat for TTD. It's true. Amazon is kicking ass. I don't own any though. Facepalm. Yeah, but what price do you want them at? Like, do you want to go back in time and buy them whenever, the first time you ever heard about Amazon? Like I don't know. If you like them here and they're still underperforming and not that expensive versus their peers, like where do you want to start buying them? I'm not hating on Amazon. I'm just asking. Well, I think that they invest every last dollar into data centers and, more efficient warehouses and everything, and they're just kicking the crap out of their competitors. And eventually, I think that they will win. They will have warehouses that they won't need to continuously invest in, and margins will improve. For the first 20 years, the Amazon.com didn't even make any money. It was AWS that brought in all the money. Amazon.com, is now making money. Like margins have improved with robots, full self-driving, artificial intelligence, everything like this. It would be hard for me to believe that wouldn't go into improving margins and really starting to pick up on the amount of, free cash flow that they can generate. I think it'll come. I want to see at least top line to grow for Amazon before I buy it back. Why isn't why do you think that the top line isn't growing? What gives you that opinion? All the bears from 1999 were right. Amazon's model cannot work. Okay. Well, Amazon.com is profitable now. So it disproved a lot of the 1999 theories. We'll see. We'll see. Everyone here is allowed to have their opinion. Amazon was a retail company to ship goods, and that has not proven to be profitable. Well, I mean, Amazon.com is alone profitable. But also, you can't just shift what you think the company is. You can call it a retail name and then say, hey, Amazon or AWS was a side project. Well, AWS is the largest cloud provider. So, yes, they're absolutely going to, like whenever you're a shareholder of Amazon, that still counts. So whether they become a healthcare company or are shipping products for other companies or doing third-party distribution for Buy with Prime, whatever, that's all under the Amazon name. If they're doing advertisements and Twitch and all of these things, and you don't consider that the retail business, who cares? That's all part of the balance sheet. That all goes to the bottom line. Trump hates Canada now. Yeah, it's looking rough out here, boys. I don't know. Okay. Ladies and gentlemen, at 10 o'clock, we are having Steve, Chris Hager, Tevis, Roy, and myself on the final show before SoFi earnings. We're going to talk about what we are expecting. It's hilarious that the Knicks are winning. If I get this 3 for 3 without even knowing who they're facing, that's going to be awesome. Thank you to the Twitch crowd for being here as well. We've been growing steady on that platform as well. So appreciate you guys. But see you at 10 o'clock where we'll be live, and expect a BM&R video tomorrow. Thank you all so much for watching. Really do appreciate your time. But bye for now.